It's the weekly 30-30 list on the ASX. We're reviewing the 30 best momentum companies over the last quarter and the ones that have had the best improvement in momentum this week. That's what we call the Launchpad. Gary Glover has been through the list, pulled out his favourite charts, and is here to review them with us. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
Friday, we look forward to the list, the 30 best momentum companies, the 30 Launchpad ones, which over time, it looks like it's about 2 to 3 trading weeks, goes from the Launchpad to the top momentum companies. So if we start off with those momentum companies, the ones that are already leading the market and putting on the massive gains, which charts are catching your eye?
Yeah, look, the first 3 probably, they've sort of just gone straight up, Chris. So pretty hard to trade those. I mean, what does sort of stand out on your updated report here is the percentages. So that SLM, that's up 709% since it hit the Launchpad.
Sounds
LME,
like a cryptocurrency going up that much.
Yeah, LME, obviously that's a bit of a gap up on, takeover sort of thing there. What RR1 up 357%. So gee, some of these moves are massive. AZS was probably the first one there. That's up 250%. So big moves there. I guess the only thing about this was this is one I listed last week. Actually, I didn't cover it last week, so I don't know why I didn't cover this one. It's sort of this looks quite good here. Maybe it might have just broken out of here. Maybe I thought, it's already gone, missed it here, but had that little BCP, little tightening pattern in there. Probably the whole thing sort of sat on. See how it sort of sat on top of that previous high there. Sort of, I think last week we were talking about overlapping trends and how important it is to sort of sit on top of the high, not overlap. And just look at that. That's done exactly that. Sort of sat right on top of the previous high and then gone here. Saw a bit of volume. Had a bit of a move here and had a little consolidation there again. We talk about one of the things the last few weeks we keep talking about is that when they sort of pop, you might see one day of selling, but then if you don't see any selling through volume, any follow through, they can keep going here. Look at this thing here; it's gone pop here. So just some good lessons in this one here. In that, sometimes if you do get the VCP pattern and it kind of kicks up and breaks out, and if you see it a bit late, we still got to keep an eye on it because it can still sort of consolidate. And we've seen it with these leaders. I mean, some of these leaders here. WA1, that move there. That's had so many small consolidations along the way here where there's just no selling has come into those. So it just goes to show if you do break out your BCPs, even though you feel like you might have missed it, then just wait for a little consolidation there. I think Christian Calamagia, he'll wait for if they're really flying. He'll wait for them to come back to the 10-day. If they're more of a builder, he'll wait for them to come back to the 20-day or sort of near it and then try and enter there. So some of these leaders here, they're just typically, look how strong that is. It hasn't, it's basically floated with the 10-day moving average a few times, but it hasn't broken below that. So, if you're long this stock, if you're lucky long, you'd be running with that 10-day moving average, I'd say, with you as you stop. That's pretty key. REC, again, probably the right theme here, Chris, as well. So a bit messy in here, but I think that's probably interesting here is the volume. Had pretty good volume up in here. Very little volume on the pullback, some good volume again. Very little volume on the pullback here. So, that volume is so important here with some of these smaller ones here. So had a bit of a pop here. So saw a little bit of volume here, but you're probably going, we're probably going to watch this, see how it consolidates there. Ideally, if you see a few sort of consolidation days and it doesn't sort of see much sort of selling there, then it's probably worth looking at again. I think DLI, this was on the list last week. We sort of talked about this consolidation there. I think at the time it was having a bit of a consolidation there. I think it might have had that one day up on good volume there. Pull back here, pretty light volume. So, again, struggling to go down and we're pushing on again. So some pretty good volume through there as well. So it's not, that's still pretty firm here. So nothing wrong with that trend here so far. So until it sort of shows something different there, still looks pretty robust. future battery. So, definitely some themes in here, Chris, all kind of a lot of these sort of battery, lithium, rare earth sort of stuff. That's definitely sort of sector that's still getting plenty of movement there. Still lots of stocks sort of popping out of those ranges there. So
there was an interesting stat in the AFR this week that the critical minerals miners on the ASX now have a larger market capitalization than the gold miners. So if the share prices kept going up like this, well, that's pretty easy to see why.
Yeah. Exactly. So that looks pretty good. So that was another one that sort of had that pullback there, just no volume on the drawdown, and then we sort of got volume again. So it's probably a little thin, this one, but does look all right. AKP was sort of one that we mentioned previously, Chris, as well. Had a bit of a pop up there. Been sort of consolidating here now, so I think saw a little bit of selling, not much follow through, another little bounce, a little bit of selling, no follow through here. So probably just sort of going through a little bit of a congestion phase here, but definitely one to keep an eye on there. AXE, Archer Materials, that's had a nice little pop as well, some good volume in there. Probably a little bit of selling in here on that first pullback, sort of 1 day there and a bit more in there. So it's probably a little negative, but gone back up to retest the high here. But yeah, this is probably not as constructive as some of the other ones. Probably just prefer to see a little bit less volume on that sell there. XAM, there's that sort of, again, you've had a pretty nice run up here, good volume, good breadth sort of through that, pull back here, gone back up again, some good volume again, and look at the pullback there, pullback on no volume there.
No volume. So as low as before it broke out almost.
Yeah. So we've sort of got it's almost a little, basically a cup and handle in there, Chris. I know it's probably come back to around the midpoint. So if you look at sort of, sort of high to low here, this is probably around the middle there. So the fact that it's sort of held in the top half, come back on very low volume, and we started to see some volume, come in here. This is a good sign here, seeing this sort of volume there. So XAM is Xandu Mines. Don't know what sector that is, but I'm guessing in that mineral area, I'm guessing. Deep Yellow is sort of one that we spoke about recently. That launch pad there, I think we don't know how many days we're in the launch pad there. We've been there for a little bit. So it was about 3-4 weeks ago that we those uranium stocks did sort of hit the launch pad, had a bit of a spike, bit of a volatile period there with some of the overseas stuff there with Paladin. But then all the volumes come in there. It's just a higher low here, and it's gone straight up here. So pretty robust here so far. Again, look at 1 day selling, second day almost dried up here. So nothing here negative here yet. So this looks pretty good here. I mean, they run a bit. Definitely a sector to be keeping an eye on for consolidations. Does look pretty good. GCY, bit small, but volume pretty interesting. Some decent volume going through there. So had this rally through here. That's probably a small one. I normally wouldn't sort of touch here, but this one here, the volume breadth has been pretty strong through here, and now the volume's dried up here. So this is one we're sort of keeping an eye on here. We get a bit more of a consolidation, a bit longer there. Definitely sort of worth following there if it turns back up again. NGI, again, we've had some volume through there, bit messy there. Probably want to sort of see some sort of consolidation there, but probably just to keep an eye on that. Paladin's not on the list there, probably just had that 1 day, might have just took it out of the list, but that has had a fair pop there with Deep Yellow. You might see a period of consolidation here, but pretty light volumes here so far. So good rally on good breadth here. Pulling back here so far, pretty light volume. So it'd be nice to sort of see this wind back a little bit on no volume. That's our sort of our quarterly momentum. So the first stock that I saw that I liked here on the weekly one, I mean, again, I think a lot of those other ones have sort of popped here few little takeovers and stuff in there. A few of them just sort of really just gapped up out of nowhere. So, yeah, it's kind of hard to trade a takeover, or if there's a big announcement, the stock gaps up like 30-40%. It's hard to sort of follow those unless it's a bit of a game changing aspect there. But I thought MGX looked pretty good here. Mount Gibson Iron Ore, some pretty good volume through there. So that has sort of moved up impulsively. So I've seen in the past here, does move up impulsively, then come back corrective. We saw the past there, look, talk about moving up on pretty good volume and then pulling back on no volume. So this is one to watch here. We see something like this, good volume breadth here, pull back into the lower volume there. Just notice a few of those miners have sort of started to bounce off the lows. Interesting stat here, Chris, is I think I tweeted this actually probably 6 months ago or something, maybe a bit longer. August 2002, that's basically when that was the last growth crunch. That was the low for the 20-year cycle. So back in 2002, October 2002, that was the low for equity markets. But the commodity cycle didn't find a low until about 7 months later. So it was May 2003 that BHP and Rio, a lot of the commodities found a low here. So if anyone's been noticing that BHP, Rio, Fortescue, they all came back into the end of May. I think the 1st of June might have actually been the low here. Exactly 7 months, almost eerily similar to the 20-year cycle. And they've bounced aggressively. Big volume, actually, some pretty good breadth there so far off of that sort of late May, early June low, almost the same timing as 20 years ago. So just interesting sort of cycle there, observation there. So
it's interesting because also off air, we've had conversations about the leading themes and sectors. And oddly, it's been the large miners producing mineral outputs and iron ore kind of scratching our heads saying, well, what's going on there? But clearly they've been basing before they popped. So that's been going for a couple of weeks. Yeah,
look, I know there's obviously chat about the China stimulus, and that was, that was coming through for a week, but those stocks were rallying pretty hard off that sort of early, pretty good breadth too. So it wasn't just sort of running up on, a low volume, low commitment rally. There was definitely some, some buying in that. And that on the Tuesday report there, Chris, talking about how the market sort of pulled back 8 weeks now as well. So it's sort of like our index has had like an 8-week pullback, sort of double the previous sort of rally. So it's good timing for our index to have a bit of a low and get going here again. So yeah, it's interesting that sector, which is a pretty big sector in our market, is had a pretty good move here and pretty good volume. So that's a good sign. And even the banks as well, which all got down to like, 6.5, sort of 6.8% yields there, which is like, I've been in this game for 20 plus years. If I just bought the banks every time they got down to a yield of 6.5 every year, I'd I wouldn't have too many bad trades if I just done that every year. But yeah, definitely some value there at the moment. So just interesting that some of those stocks, both those sectors are rallying together, because normally you get, they don't often run together, those two. So yeah, pretty healthy for the market here. And this market is going up here, in the face of everyone's, recession talk and inflation. And, I heard a great quote actually during the week. I think I was listening to Mark Ritchie, who now works for Minervini, actually manages some of Minervini's money. Said, trust your eyes, not your ears. And that's really basically the price action has been telling us how positive the market is, and been no selling on the way down. So the price action has been constructive, been building, it's been positive on the way up, been pulling back on light volume. So our eyes have been telling us here that market wants to go up. Our ears have got all the noise, that all the negativity, all the reasons not to be buying this market. So I think it's a cracking one to actually maybe write on your PC there. Trust your eyes, not your ears. That'll keep a lot of the people sort of new to the market sort of just following the price action. That's probably the key there for those things. 5EA was another one there. It's had a bit of a bounce here. Still hasn't broken a swing high there, so that's probably still a negative. Bit more volume coming in there. But yeah, we do want to break above swing high. It's very ethical, which has been a bit of a pretty strong downtrend now sort of broken a swing high, some okay volume in there. So probably all about watching this first retreat here. But the Australian Ethical Fund there was sort of in my opinion, got way overvalued. And now it's had a very deep correction as well. Probably come back to sort of more sort of fair valuation. So could be one to watch there. Macquarie was one that I actually added to my model portfolio during the week. Really liked the look of this. I like the banks, and yeah, we've just sort of come back here and we've sort of jumped out of the gates here. So good. What we're seeing here is good volume there, Chris. So a bit of this like a lot of these sort of maybe these chony markets there, you're sort of seeing choppy volume here. This is pretty good volume here so far. So banks showing good volume, resources showing good volume here. So it's definitely a little bit more commitment in this last bounce here than I've seen here for a bit here. So that's good signs. LCY, just sort of saw this one here, just sort of gapped up in big volume there. A bit too small for me, but legacy iron ore is in a sector which is moving at the moment. So probably worth just sort of watching this one, see if it, maybe get a bit more liquidity, maybe some consolidation of sorts there, but probably one just to keep an eye on. AUB, just like the fact here, this is possible VCP sort of setting up here. Just we're all congesting under the high here. So what kind of stands out here is look at this volume here. The last three out of the last 4 days up here, massive volume there. So this leg here, so a bit messy in here. You'd like to see this probably dry up a bit more. But in fact, we've gone up to the high here, pull back, gone to the high again, pull back, but shallower this time, and now we're going again. This has got some volume behind it here, so this is definitely one to keep an eye on. It looks pretty good here. So
that whole insurance space for the last 2 weeks has been consolidating well, ranking well on the launchpad as a theme, and then with IAG breaking out a couple of days ago, Ausbrokers and a few others sort of got carried up with that tailwind, and this is, as you're saying, this huge volume. It's looking pretty positive.
It was weird that IAG sort of gapped up on the first day and then kind of sort of sold off a little bit, and then the second day just gapped up and powered on. So it was almost like they're in denial the first day, and then so I thought it actually looked a little tighter. I thought it might have been sort of one of those sort of buy the rumor, sell the fact, sort of gap up into the news and then sort of sell it. That's what it looked like on the first day, but has sort of kicked on there. So no, pretty good there. SGF was one that I didn't mind as well. I like to look at this. Again, we've sort of had this sort of corrective decline in here, little three-way pullback, come back up, maybe rally back up to the probably still sort of haven't broken a swing high. That's probably the negative there so far, but we are sort of congesting under here again. So a little bit of a VCP sort of possibly setting up here. But yeah, probably breaking this sort of level here around 215. That's going to be probably quite positive for the stock here. So bit to go there yet. But yeah, just sort of seems to be building there quite nicely there. Just like the fact that sort of saw some volume off the low there. Pull back on sort of lighter volume, good volume at the low there. Seeing some good volume this week here, so we're definitely one to sort of keep an eye on there.
How important is it to see it sort of consolidate and compress, and like those moving averages that you've got on screen, they're all kind of crossing over each other?
Yeah, look, it's one of those stocks that sometimes we don't sort of. Me in the past, I've sort of stayed away from these stocks. They don't look. They look like they're going to go higher, but they're not in a rush, So, I want to buy something which is going to go up faster, or congest more, or and invariably you just see these ones just climb. What's wrong with sort of going up slowly? As long as it's going up, staying, holding firm and showing sort of relative strength there. So, trying to change my stripes a little bit, trying to get a bit wiser over the years. So, a bit of a funny week for me personally. I've done a lot right this week. Probably I've done a couple of trades I've been working into over the last 3 weeks. I've sort of scaled up nicely, got some really good positions on. some of the stocks that have been a bit erratic, I've trimmed into strength and I've added them up, so some really good things that I've done, and I've done some really horrible things as well this week as well. Sort of probably over traded a bit too much. Got into sort of, probably because the market's, not seeing all my best sort of classic setups at the moment. I've traded a few other sort of some old setups, and which are sort of probably more not trading the stocks showing relative strength, and I've paid the consequence for it as well. So I've had some frustrating just seeing sort of the trades that you sort of scale up and do everything right and work, and then you give some of it back here by trading some of the stuff you shouldn't be trading. So kind of a big reminder for me this week just to stick to your bread and butter and get back to the classic stuff and keep it simple. And just as I think I'm not sure if it was that same podcast I was listening to with Mark Ritchie there. He was talking about Jim Belichick, which is I'm guessing is the Patriots coach there. So quite a well-known NFL coach. I think there was one year there where they basically it was the largest halftime deficit they came back from, and the speech at halftime was forget about the score, just follow the process. And maybe just the thing that really is what the trading is about too. So we can be, I've sort of been looking to get a few big scores here on the market, trading some of these maybe sort of bottom dwellers there, sort of coming off the lows and stuff there, rather than just sticking with the boring sort of strong ones here, the showing relative strength there. So don't go looking for the riskier trades here. Just take the low hanging fruit, take the trade the strong ones there. So all the stocks that are
I don't think it's fair to call the relative strength ones boring though, because at the start of the podcast and this interview, you pulled up some solid percentage returns.
So, that's right. Yeah. I mean, look at, CCP is one of the ones that's flying to me. I've added to that and added to it and added to it. So I've sort of literally sort of scaled myself into this position quite nicely. And I've been very patient about it because it's been a bit of a churny market. I haven't tried to chase the up days of sort of, even like 88 as well, sort of that's had a few big moves up and down. So it's in one of our, it's relative in the right sector, going to new highs. It's no swing low broken, so showing all the right signs there. So just got to trade those. So there's plenty good trades there around there. You're starting to see a few stocks that are getting sold off kind of aggressively. So you think, these look real value here. So wait for a little bit of a first higher low, or wait for a technical setup. I've probably gone back to a few old technical patterns that I used to trade, and they're just not as reliable. Got a higher failure rate. So it's just got to, it's okay to trade those and occasionally, but I think it's that sort of Christian Kalamagi comment there that I think I mentioned it last week. There, he trades only stocks with a relative strength above 98 or something like that. So he only trades the top 2%. So the strongest stocks on the board, doesn't trade anything else. So
that's Culling. That's he's got a larger universe in the US, and we could definitely trade that. But for the Aussie, that's that first list that you went through. They're the top 30 companies. That's
so if we're just trading the top 5% or something, just in Aussie, that's all we need to be sort of doing. So it's interesting there. But yep, and the last one on the list is Red 5. I thought this looks interesting here. Probably a little bit duller price action, but just like the fact that it's come back in a three-wave manner, and that whole corrective pattern there is on very low volume. Whereas this, the first rally here, we saw good volume, good breadth through the whole move. And then after this no volume, we started to see volume again. So ideally breaking above a little B wave there. So breaking above that 18.5 cents, sort of 19 cents there. So, I think breaking above 80.5 would be sort of a positive sign there, but I do like the fact we're seeing some good volume here coming in here. So definitely constructive there.
That's
the last one. Yeah.
That's a good list and good picking from the top momentum changes just in this week. So they're the ones that have had sort of the most advancement in their momentum movement this week. So that's the Launchpad. And as you pointed out right at the start, there are some solid gains in those momentum leaders. And you were talking about Qualamagi, where he'll just focus on those top momentum stocks, which you've pulled out some pretty solid charts. So to that point, that's probably a lot for us to go into the weekend with, a lot to review, a lot of charts to unpack, and a few to add to the watch list and dissect the charts, the fundamentals, and their themes. So to that point, we'll wrap and say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.
Gary's mentioned all of those trading strategies. There's a whole playlist going there on the right-hand side. Also delves into some of the research that Gary's looked at for inflation, cycles, 20-year cycles, etc. And then also the left-hand side is Gary Glover's Twitter handle if you want to follow him there.